S&P 500 daily chart, SMF platform, okay? So basically what we're going to be doing is we're going to be looking at this S&P again and how these reversals have happened all the way to the current lows going into the dog days of August, how the VIX had spiked, how the VXN, how the fear indicators have gone, everything that's been involved in this last bottom from our original reversal with the confirmation reversal and upside volatility reversal. That meant that the 2000 this was your great summer rally that we did, but we have failed it miserably as we knew they would. And the thing about it is now we know how a bottom was put in here. This is a bottom. It's another way of looking at this chart. And that the bottoms over here that have been working for the calendar year, because when you start getting back over here, that's where we had that long daily breakout to that first failure, but this is back in November and December and January. Okay, so we can see what 2011's been about so far. We're in the last dog days of August. The lows that snapped their back from the counter trend, so we had a counter trend rally to a reversal. That was at 7-week one. This one was a very short one in the year that we had did, but we made the highs. We did not ever close back above it, but we have made another bottom. Now I'm going to click over here and I'm going to show this bottom here only. What this bottom was. Whoops. What this bottom was. This was the bottom that we started doing back on 8. Let's see if the dates match. Okay. When we were putting in the daily bottom back here, this was 6/14 date on a move up that we had. But right here on 6/15 we had come down. Now you can see where we put in that bottom here back in that time frame. You can see how the breakout got tested at that teeny line, but then we had a good daily breakout and an all-time reversal. Now, when we go over here, and I'm just going to hit my diamonds one more time. Oh, look at those gauges go, Bill. So I'm going to populate them one more time. Make sure that everything is true and accurate as we populate through all the alerts. There we go, 826. We got S&P. This is the diamonds of where they closed right here. They got 2 diamond alerts. Now, what we're going to take a look at is this bottom. I'm going to blow it up. And this is all I'm going to put here. This is the bottom. And we went up, and last week, in the last 5 days, we had a 1, 2, 3, 4, and 5. And we're holding the half daily bar at 1142.63. Not only that, we know that the S&P 500 has a half bar up here at 1229. This was on 8/4/2011 when it fell that 1200 neckline, but particularly that half bar at 1229.89 sent this down to this consolidation bottom, 4-day consolidation bottom with the breakout and a test, and they all on a daily level look like something. So Monday morning, the last days of August, is that here's the half bar on the S&P 500, 1194, half bar 815, 1194.04 pennies. Okay, this particular half bar here, which is, and write them down in sequence, this is on 8/18 of 2011 at 1160.33 pennies. Notice that the last print on the S&P is 1176.8, up 17.53 handles. And what's amazing, in our platform, a half delta price is 17.61. And it closed up on a half delta dollar price expansion in the MMT platform. That equals strength. This particular half bar right here, that's on 825. You will want to write this down. 1173.8. What date? 825. What was the high on the S&P on that date? 1190.68. It opened at 1180, but here's the thing. It closed at 1155.47 or 1159.27, but the intraday low was 1155. Now, what we're looking for is that this bar does not get violated, and or it comes down, but it closes above it. And the other major component is taking out this half bar right here. This half bar was on 817 on a half bar level on a daily, 1196.42 MMT. Now, granted that you closed at 11.6.8, you're going to have to take out that high half bar and consolidate. And the next challenge, as I said, is this half bar right here. This one's important too. It's one to keep our eyes on, so that you know that 1193.10 was a major bar on 8.5, which is slightly a few handles below the last one that we just talked about at 1196. This 9-day consolidation, if you take a look at 1, 2, 3, 4, there's 5, and there's 4, is that the back half, so this is 9 days that I'm looking at going on a 10th day. But out of the last, we must take out that upper teeny line. That's 1200. That's your next half delta. And this is going to be the key to this bottom, is how this top is taken out to all-time highs going into a major holiday starting tomorrow morning. That's the upside. The opposite side is how do they come back down in the invert or reversal and fail, is that these half bars over here at 1140.83, we would have to close below that 810 1140.83. That would be the new resistance level. That we would break below that half bar, close below it, but we would torpedo below this half bar on 811. That's 1153.80 now. You'd come down, you'd print through it, and then you'd print through that one there. And then the last lows would be in jeopardy. And we'll know in the trade management structure in the next calendar week exactly how to do that. And the other thing that we do understand is the call options and put options in the S&P. And we've got 1080 puts below the market we're looking at. There's 1100 put we're looking at. There's 1150 call we're looking at that we already have. There's an 1150 put to, see what the ratios are. But the most important one is that 1260 and that 1220 call, which we've been buying and selling on a daily level. But this S&P 1260 call goes over here in this weekly chart. And the reason why I'm going to show the weekly call on the 1260 on a weekly instead of a daily, I'll show that next. That weekly low was $1.40 right here. And at the time that hit $1.40 MMT, the beautiful thing about it is that on the daily level, that's part of that bottom up last week. When we hit the bottom up on this daily chart, from part of last week's big up day off of that bottom. That was that reversal. And they went home long Friday, because they did. And that populated that contract from $1.40 to the current level. Now, let's take a look at it. $1.40, the high was $4.85 on the week. And the low was $1.40. So, by understanding the trend that we will be doing is if the things go, if they consolidate the higher ratio levels, that means that their strength building and a breakout would follow. And the very opposite is that the weakness could build before you break lower lows. You do not want to be breaking this bar. We already know it's 1142.63. This half bar over here is 1133.29, and this one over here is 11.3822. But it's going to be that when these start to take out their price action, these are going to be where the original volatility up is. So if I don't go higher and close above here, then that means I run into a double top with a potential reversal. So weighting our trade management in this structure here is understanding that upside volatility in the last calendar week of the dog days of August can happen. And just on the other side of that coin, when we go down here and look at, I will show you. So let's put the S&P weekly chart back in here, and let's move that over, and let's get into the a daily 1150 put, so you can see where that is. That put option had got exhausted. If you were buying these put options down here at $3, they went to a high of 80.25. Boy, you had 30 of those. That's a couple hundred grand. That's what we call the SMF twin turbo S&P option trade. And guess what? The RPMs came down. They've been popping up in volatility. And this is that 1150 put that was extremely inflated here. And it's pulled back quite a bit off of those highs, $30. But they've been making lows too. If you take a look at the low of that 1150 put on a daily level, the low was $24.50. The high was $50. That's the kind of range that you have trading the twin turbo S&P 500 index options. Now, that's the 1150 put. 1260 call. Look, all alert. That call was totally inflated up here, but it's been deflated. That 1260 is down here. Here are the lows. $1.40. Told you that. But they were on 7/8 of 2011. The high was $92 a contract on the 1260 call. And they were taken to the woodshed and they lost all their value to this deflated premium. And at the same time, same month, the 1150 put was putting its bottom in here at 330 on 722, and we were way higher at the time on the S&P. But look at here, they broke out. So when the S&P broke down, and what does broke down mean? This is when the S&P was breaking down, and this is when the turbo 1150 put twin turbo was breaking down the highway. And then they finally got inflated. And as they got inflated, the 1150 put, because we are closing above the strike price from this bottom, and that's why that you hit that. Then we had a day in here. You can see the volatility. They popped up. They're back down, and they're in a range here. Okay? And the thing about it is, when we change directions, this premium here is going to come down and even go lower. But on the other side, if we break out here, and we'll know tomorrow, we'll know how to get in it. Getting in it's the easy part of it now. This is the part that needs to be diagnosed correctly. That means that this bottom, right here, this daily bottom, has got to happen, and that the upside volatility is the downside half bar closing bars. Okay? So MMTs that have the platform, wherever you're closing going minus negative half, that's going to be your future forward-looking resistance when you break these highs. But you're going to have to break this little 3-day rally to this little reversal that we had, as we're lagging one thing. Yes, this half bar is a nice bar at 1160, and we're closing above it by damn near a half delta. And that's all really good strength, because we're closing above the half daily bar, and the 10-day moving average, if it tilts up, the resistance is going to be here, here, definitely going to be up here. Definitely that is the 12, slightly close to that 1260. These will be the lines. They'll change in price little by little, but that 1220 line is going to be right here where that diamond is, believe it or not. So if we break higher, we're going to see that once we clear this 1200 delta line, that we go up to the next line on the 1220. Now, what would that do? What would that do for this? And what is this going to be? The SMF Twin Turbo 1260 S&P 500 Index Option. Here we go. We have the 1260 call, 320 by $4. I closed at 360, 3,900 contracts were traded. 220 is the low, and 380 was the high. Okay, as far as Friday goes. And it's up and out of the money. 1260, 917 expiration right here. So we're going to get the lowest wholesale bid here because we know that the lows at the bottoming process relative to what the S&P was doing in its dog days last week was somewhere right around $1.40. So they've already gone up 100% in value. They were 485 here, but they're pulling back, and 220 is the low. So there is a 220 to $1.40 premium at the last low. That's okay with us because you see the upside volatility from the deflated zone is going to work. Now on this there was 32,000 volume traded on the 1150 put. This was that original breakout. Boy, what a big pair that was. That's when the S&P 500 was going down on the daily right here. And that the major break point to the upside volatility distance is 1, 2, 3, 4 half deltas up at 17.61 per delta line. If it changes in the morning, it could be higher or it could be lower. But the thing about it is the half bar readings and the upside volatility is there. The downside volatility is over here in these bottoms, these half bars. I already went through them. And basically when I look at half delta in here and I take a look at my delta tree on half deltas, I'm going to take a look, and I just repriced this thing, so let's take a look. So to get to this 1200 area in our platform is you need 2 1/2 delta movements. And roughly to get to the 1290 area, if you were to break through one full delta, that's 45 handles, one delta up, it's a delta ratio equals 45.32 for tomorrow. But here's the thing. A half delta down, 11.99 is here. The 12.22 is up there. That's slightly up here at this trend line. So we have everything right. We need to know which side of the market's going to continue to pay. And by using the half up and the half down, and you will know by the closing half level bars on how we're going to either buy some of these intraday. The high was $50 hot. The low was $24.50. They closed at Friday. The 1150 put closed right there. $39. Close at 38, comes down to 24.50. What a nice trade that was. And then you look at the money, you got 24.34, a $15 move off the bottom here and the 1150 put. Okay? And that was based on Friday's trade action that we went off of those bottoms back up to these levels within that daily wick down here. Now, on the flip side of everything, here in this call contract, that's the 1260 call, when we come down and hit the levels, we buy this side of the market at the most wholesale price. So if we could get this somewhere around $1.80 for the calendar, what's left of the dog days, if they walk the markets and break the S&P higher, of course we're going to have to pay a higher price. And of course these are going to come down in value. All right? And if these are going down in value, then these are basing in their value before they go higher in their value. And once again, understanding how to apply the daily buy and sell price line actions in the S&P 500 and what this bottom is about, what the upper end of retest could happen in the last week. But then again, if I break this over here, these half bars, and go lower, then I'm going to make money on the put side of the S&P. So once again, when you're doing these, there is a twin turbo, SMF twin turbo trade in these S&P contracts, and we have lots of live videos with live entries and live exits showing how you can steal that bid and then be on the ask and manipulate the prices in here. We have live videos on stockmarketfunding.com. If you don't know which ones or where to find them, then send an email to info@stockmarketfunding.com and somebody will point you in the right direction. However, we are going to be trading into a new calendar month. And the thing about this S&P trade, and I'm going to get back to covering all sides of the market, and particularly how bottoms, daily bottoms have been put in. We're not taking out that high yet. We have to take out that high, but we have to continue to consolidate with half delta expansion in the brain. You can't contract. You have to expand. The higher dollar range in the S&P that you expand, the more strength that the underlying support levels have, and they bounce extremely hard from the lower price levels back up to making higher high levels. This 9-day, 3-day, part of a 9-day cycle in here, but part of the 9-day, this 3-day top right here at that teeny line, we got to get above it. And in the last calendar month, going into September, is how this extreme bottom got put in within the summer period, and how we're changing seasonality and what upside volatility looks like right along with the downside volatility. There is downside volatility in the S&P. And if we break any of these levels in the S&P, if we come, I mean, the S&P, like I said, -2 full deltas down is 1086. We'll worry about these negative delta ranges. Right now we're working with what the upside deltas look like, but also if we break down in the delta range, how to trade that put side. And we use our tools correctly to trade this. This is not up here at $80. The high was $80 right here. The low was $24.50. So they'd come down overall to low prices. Based on directional movement in my S&P 500 will be the SMF twin turbo S&P 500 index option management